So last week I was asked by my girlfriend to analyze her retirement savings plan, essentially the Canadian version of the 401k. And I did an entire breakdown of investing on your own versus investing in a 401k or a savings plan. And that's what I'm going to show you guys today. Which one is better and which one is for you? We're going to give you guys a breakdown here, and well, my opinion, if you guys have watched this channel, it's kind of obvious, but we're going to show you some numbers here. We're going to start off with some numbers. So we're going to start off with a normal, if you were just to invest in the stock market by yourself. I guess we should say here that when you invest in a 401k or a RRSP in Canada, some sort of savings plan, they are just investing your money in the stock market for you. That's all they're doing. That's what the plan is. Okay, so we're going to compare on your own. Okay, let's say to start investing on your own, you have $5,000. Okay, you have $5,000, this is your principal. And then every year, you add 5K. 5K per year. Plus 5K per year. So this is fairly standard. $5,000 per year. I mean, usually when people put in about $3,000 to $4,000, $5,000, the average person making like 40, 50, 60 grand a year, they'll put that much in their 401k. So this is just a very, general estimation here. So if you're investing on your own and you do this strategy, you invest on your own, let's say you're an average investor, you get 6% return. You have a 6% return on investment, and that's fairly average. You can get more, you can get less, but that's a fairly average number. Guess what that number will be in 40 years. So if you started this investing at 25 years old, 5K a year for 40 years, by the time you're 65, the normal retirement age, this number will go up to $871,667. If you invest 5K per year at 6%, that's the money you're going to have at the end of the rainbow. That's a pretty good number here, because you're only putting in, let's just see, doing some quick math here in my head, about $200,000. Because 5,000 times 40, that's about 200,000, right? So you're putting in $200,000 here, and you're essentially getting $671,000 in interest money, in compound interest money. So that's pretty good. On your own, now we're going to compare this was actually an exact plan that I saw in my girlfriend's, plans that they were offering. There was about 25 of them. This one was the best one, but this is just the plan that they were offering, okay? So we're just going to call this one 401k. 401k. So on your own, 401k. It's the exact same thing here. So 5k principal. Oh, I spent principal wrong. That's principal. Isn't it principal? Haha, spelling. 5K principal, and then you add 5K per year. So here's the deal. They can get a 6% return. Okay? This is what they were saying. 6% return, which is fairly average. 6% return per year. However, all the fees, all the hidden fees, I went through the entire notebook. They stated a 0.8% fee plus other fees of 0.5%, plus if you want to take your money out before then, additional fees of 3% sometimes. A lot of fees here. There's transactional fees and so on, but usually we're going to say that this adds up to 1.3% fees. So 1.3% in fees, what does this do to you? What does this do to your return? The exact same thing here. Your return here is $619,000 and 346 cents. So we're talking about $260,000 from a management fee. From a management fee. And this is if you're an average investor. This isn't talking about if you're making $150K a year and you're putting away $15K into this. This is the average person is getting screwed over. Now, there is a scenario where this is okay. The scenario when it's okay is if your employer matches your contributions. So or at least somewhat matches it. So for example, my girlfriend's company, they're matching up to about $2,000 per year. So that kind of negates her the 1.3% management fee if she were to work there for 40 years. But odds are she's not going to work there very much longer, and neither will you, most likely, unless you've been at your company for like 5 years and want to be there for the rest of your life. And the company doesn't tank and everything's perfect. If everything's perfect and you plan at staying at your company for the next 3 decades, do it. Do the 401k matching thing. They can match all your contributions, and that'll be a massive return for you. Massive return. So we're going to move on to the next thing here, which is that we're going to say that you add a little bit more money here. We're going to say that you add more money, you're a little bit wealthier, and actually, the thing is here is that if you want to be a millionaire, I talked about this before, the average employee millionaire, we're not talking about a small business millionaire who does things completely different, who doesn't have a retirement savings plan like me. Like, I'm not going to need one, neither will most entrepreneurs out there. Probably not going to need one if they build up a successful portfolio of their own investments. But the average employee needs to invest about 20 to 25% of their income in the 401k, stock market, so on, to become a millionaire. And so we're going to cover that next, actually. So in this next example, I'm going to be showing you what if you contributed twice as much as before? What would the differences be from the management fee? So this is going to be super, super quick compared to the last 2 examples. So anyways, we're going to say 10K principal and then plus 10K per year. Plus 10K per year. We're going to say 6%. All right, we're getting through this really quickly. So over 40 years, guess what this number is? This number is 1.74 million. Investing 10K a year at 6%. What do you think that number is if the management fee was in there? If the management fee was in there, this number drops down to 1.24 million. We're talking $500,000 here. So think about this. That's like 20% of the portfolio is just gone. 25% of the portfolio goes to the management fee. So here's the moral of this. I'm going to give you, so that's just the numbers example. From the numbers perspective, if the employer doesn't match it every year for 40 years, they're screwing you over. Then it's better to invest on your own. However, there are certain scenarios where I do recommend doing the 401k route. And I just want to mention one more thing before we go on to that, actually. So my girlfriend's company and her plans that she was offered to start investing in. So some of these plans, there was about 25 of them. Some of them had about $4 billion in them. They take about we'll say average 1% fee. That's $40 million per year that this financial institution gets to just buy and hold stocks. Buy and buy more stocks. That's all they do. And they get $40 million. Why do you think that they're setting up this plan? It's because that's how they make their money. They don't make their money from you gaining money. They sure make a tiny bit. They don't gain, if the market goes up 1%, if your portfolio goes up 1%, they take that 1% fee, you don't get anything, they get $40 million. Does that make sense? So they don't care too much. As long as the fund has money in it, that's all they really care about. So that was just one example. So in the United States, there are some 401k funds out there have $40 billion in them. 400 billion, no, maybe not 400 billion. Maybe, some could have 400 billion in it, but $40 billion in there. So that means that company is probably taking home $400 million a year for just holding your money in a stock account. So that's something I want you guys to think about. That's how they make their money. Now I want to talk about here the main differences here. So not the numbers here. I've shown you the numbers. If your employer matches for about 5, 10, 15 years, then you probably want to go with the 401k route. However, I'll give you the comparisons here. So the very first thing I want to talk about is control. I want to talk about control over your money, because this is why I want to be an entrepreneur, why I like investing on my own, why I want to buy my own real estate, why I don't like investing in other companies as much as like day traders like to do it. Because I like to control it. I like to control my money. So if you put your money in a 401k, RRSP, savings plan, whatever it may be, they do whatever the hell they want with your money. They do whatever they want with it. If the portfolio goes down, you lose all your money. You don't have control over it. You're giving trust to someone else. Plus, here's the other thing too, is that in order for you to take out your money, let's say you want to buy a home. You're 23 years old, You've put into this plan for 5 years. Maybe you're 28 years old now. You want to buy your home, and you're like, hey, why don't I take some of the savings out from my 401k and put it into my down payment? That sounds fair. I mean, some people have done that. So that's okay in some scenarios. So, okay, so you have 100, let's say you have 50K in there. You have 50K in your 401k, you want to take out 20K. Well, you try to take out 20K, but they tell you, oh, wait a second, you can't do that. That's going to be about $2,000 fee there, a $3,000 fee to take that out. Sorry about that. That's 1 year's worth of gains for you. 1 year's worth of input is just gone in a management penalty fee. That happens a lot. So having control over your, and that's the other thing too, you're going to have to talk to the people with your money to get your money. You're going to have to talk to them and call them. That could take days, weeks, sometimes to get some money out of there. Meanwhile, in your stock account, if it's with your bank too, if you're investing accounts with your bank, literally minutes, seconds. I can put money from my stock account into my bank account in seconds. How quick do you think you can get it from your 401k to your checking account? Weeks? It depends. Weeks, months, days, some of you hours maybe. For me, it's seconds. Actual seconds. So you guys are going to have to think about that too. Do you want control over your money? Obviously, there's no fees if you invest on your own. I do think that employer matching, again, some people want to stay at the same company for 23 years or 25 years, 27 years, whatever the hell you want to stay there for. I've seen that. I've seen people stay at the same company for almost their entire lives. If their employer were to match their contributions to the 401k, that's a good deal. I'll take that. If it's a good 401k plan, assuming that they're investing in the proper things, I'll take that over investing on your own. Sure, you're getting a few $1,000s extra year in capital. I'll take that. That beats the 1% fee, sure, every single year. And but here's the thing though. Let's say you just want to invest in the 401k because you don't want to have to be thinking about stocks all the time. You want it to be autonomous. You want someone else to take care of your money for you. Well, that's true. So instead of going into a 401k plan, you can go into we'll even say a mutual fund plan, a low fee mutual fund. All of a sudden, that fund pays, that's a 0.5% fee or a 0.4% fee. That's substantially better. Almost 1% lower than what I was talking about here, that's absolutely amazing. Now, they handle your money for you, and that's it. They take a fee. That's okay. Now, most mutual funds have very similar fees to 401ks. This is just a rough example. So if you find a mutual fund with a 0.5% fee, go for it. That's better than a 401k if your employer isn't matching it. But here's the thing. If you invest on your own, you can actually invest in ETFs. Now, I've invested in ETFs. I have since I was 18 years old. So you can put your money into an autonomous ETF. It is essentially a mutual fund, but it's like a robot. A robot does all the trades for you. You don't have to pay any management fee or any bank, any money, anything like that. The management fee is 0.05% in a lot of the cases. Some of the iShares, some of the Spider ones, there's iShares, Vanguard, Spider, I think those are the big ones out there right now, right? So they have management fees of 0.05% to like 0.1%. So if you want to go the autonomous route and not pick out stocks yourself, go to an ETF. Go to an ETF, buy an S&P 500 ETF tracker, or a Dow Jones ETF tracker, or a NASDAQ ETF tracker, index tracker, and you will get gains proportional to the market. So if the stock market goes up 5% in a year, you're essentially getting 5% of your money. If it goes up 15% like it has this year, you're getting, or what is it, 10%? 10, 15% this year? I think about 10%. If it goes up 10%, no, it's 8%. 8 or 9. I did this yesterday. If it goes up 8 or 9%, you get 8 or 9% on your money. If it goes down 40%, you're losing 40% on your money. So that's what I'd recommend you do if you do not want to invest in specific stocks, go the ETF route. And so this is my overall comparison. So again, I always crap on 401ks all the time. You guys hear me crap on 401ks like 24/7. There are scenarios where it's okay. If your employer matches it for like a decade, go for it. If your employer matches it for 2 years, don't go for it. I mean, here's the other thing too. If you have to switch jobs, switch companies, what's going to happen to your plan? Are you able to stick with the same plan? Do you want to stick with the same plan? How much money will it cost to take your money out and invest it on your own? What if you want to do something else with your money? I've mentioned all this before. So these are all things to think about before you go into your company's savings plan. So I guess one last thing I want to mention here too is that having a savings plan, a 401k plan, is better than no plan at all. In the scenario where it's really good, so if you make $50K a year, let's say you make $2,000 per paycheck, okay? You make $2,000 per paycheck and you are one of those people that spends a lot of money. If you make $2,000, you're like, oh, I have $2,000 to spend. $2,000 in living expenses for these 2 weeks. So if you're one of those people, get into the savings plan because they deduct the investments before you receive your money. So if you were to make $2,000 per year, or $2,000 per week, or per 2 weeks, sorry, $2,000 every 2 weeks, they will take out $200, $300, $400 before you even receive your paycheck and invest that for you. So it forces you to live a less extravagant lifestyle, which that in itself, that could be bigger than anything else. To cut off your spending, to cut off how much money you have to spend on stupid stuff all the time, that could be the biggest benefit of getting a savings plan. So what do you guys think about all this? Do you guys have a savings plan? Do you guys want one? Or are you guys going to be like me and just do your own portfolio? Have your own stock portfolio, real estate portfolio, have your own company, and when you're ready to leave, when you're ready to retire, leave the workplace, then you're good. You don't have to take money out. You don't have to get penalties for taking out more. That's the other thing too about 401ks. If you take out more money than is recommended that you take out from your 401k, you can get a penalty for that sometimes too. It depends on what your plan is. So I think that's going to wrap this video up. What are your opinions on the 401k and savings plan? I would say in general, for the average person, they are good. However, there are better options out there if you were to just seriously invest on your own and educate yourself on the stock market for like 5 days. Just go watch 10 hours. It doesn't even have to be my program, which you can check out on the link below. It doesn't even have to be my program. You can also check out what I invest in if you want to actually look at my portfolio. You can go check that out, but it doesn't have to be. You can find some stuff on YouTube. Find some good investments out there. Find some good investment strategies and make it your own. Make it your own and invest on your own, and that could save you 500 grand over your lifetime. So that's going to wrap this video up. I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.